Welcome back, it's Mark Wickersham here, and in this second part of this video I'm going to be sharing with you how do you come up with the price, how do you have the price conversation for bill pay services. Okay, the first point is you must have the pricing conversation face to face with the client, or at least virtually online using technology like GoToMeeting, Skype, Zoom. Please do not hide behind sending email proposals out to the client. We have to involve them in the process, as you'll see in a short while. Now, of course, remember I said to you earlier that when we come up with the price, your process will depend upon whether this is a standalone service or whether it's part of an existing service. So with bill pay, it could be a standalone, and we're going to look exactly at that, or it could be that you build it into your bookkeeping or annual financial statements, and again we'll look at both of those. So how do we come up with the price? Well, one option at a really simple level is, having got your brochure, you could create a price for each of your 3 levels. And that's okay, you can do that. It's a little bit too simplistic, because the real power of value pricing comes from combining, giving people 3 choices, the 3 packages, but allowing them to tailor those to meet their specific needs. Not only that, is there's things that you want to know before you can come up with a price. You want to know how many transactions they have. Obviously, for a really big company with lots of transactions, then there's a lot of work involved in terms of bill pay services. And so we need to know that. And we also want to be able to give the client some preferences, let them choose different things, because when we do that as well, then the client's in control. And what we know from that process is clients willingly pay higher prices. So what we're going to do to make this all come alive and make it really practical is, on my computer here I have got 2 models set up, and they are both in Cloud Pricing. So if you use Cloud Pricing 2.0, you'll be able to use these exact models yourself. If you don't worry. If you've got your own system, perhaps you've built an Excel spreadsheet, what you'll see in this video is the questions you can ask and how that impacts on the price, and you could build your own Excel spreadsheet around that as well. It's entirely up to you. Anyway, I'm going to show you what's on the computer, walk you through that. Remember, we'll look at the 2 instances. Firstly, how you would price it as a standalone service, and then secondly, how would you price bill pay as part of bookkeeping, for example, or annual financial statements. So come with me, come over my shoulder, and I'll take you through what's on my machine. So here we are inside Cloud Pricing, and I've set this up for pricing bill pay services using bill.com. We're going to start with looking at how you might price a standalone service, and then we'll look at how you might build this into the way that you price, for example, bookkeeping services. So where are we? We've gone through a brochure. The client now wants to buy from you. You are now ready to present the price. You should present the price in a meeting with the client using a tool like Cloud Pricing 2.0 or an Excel spreadsheet, some form, some method of enabling you to ask appropriate questions that will determine what the price is going to be. So I'm going to take you through some of the questions you might ask and talk about how some of the key pricing psychology and other things that's going on within this particular process. So we've sat down with a client. We've got the iPad open or your laptop, and we'll put the client's name in. Now we ask a series of questions, and essentially you want to ask 2 types of questions. I call them scope questions and preference questions. Scope questions are the questions you need to ask to identify how much work is involved, because the more work, the more costs, then the higher the price should be for you to make a profit on the deal. And also, of course, the more work, there's more value as well to the client. Now, preference questions are where you give the client options so they can tailor the service to their exact need, and they are very powerful, as you'll see. So we might start off with the first question I would guess that you would want to ask in terms of establishing the scope of the work is, how many bills do you typically pay in a month? Now that doesn't have to be the question, and if you use Cloud Pricing 2.0, you'll know that you can change these questions. Everything can be customized. This is merely my suggestion. So let's say we have a client that raises about 25 bills every single month that need to be paid. Now another question you might want to ask is what proportion of the bills are paid by ACH versus cheque. And I suspect the reason you'd want to ask this is that it's much easier to deal with ACH payments rather than cheques, and so that might impact on the amount of work if you're doing this for them. Clearly it won't for just a setup, but it will if you're doing it for them. So let's go with about half and half. You'll want to know perhaps how many users are going to need access to Bill.com. Let's imagine 2. You'll probably want to know how many bank accounts that they have. All these things help you to build a picture of how much work will be required, particularly if you're doing it for them. Now we can start to move on to preferences. And so you might ask them, how would they like to supply the bills to you if you're going to do it for them? And I've built in some options here. You could add further ones. So it may be they email the bills to you, or it may be they send them through the mail, which means you're going to have to scan them and put them in yourself. Some of these give you more work. Some of them make your life easier. Let's imagine they say to you, well, we'll just mail them to you. Okay? And then you might say, well, if you send us the physical bills, will you remove all the staples so they can be scan ready? And they say, no, you just sort that out. Obviously, if you have to take out staples and so on, it takes more time. So that's a scope question. How many approvers are needed? So they might want one person to approve or 2 people, whatever. And then you might want to ask about different approval thresholds. So here's some questions that will help you to identify the scope of the work and what they want. Now at this point, we can now hit your fixed price, and it will go away and calculate a price for the different options. You'll see here we have 3 choices, and if you remember from the last video, we suggested that you might want to have a setup option, an education option, and done for you. And what appears on this page here is reminding them of what's in the brochure. Now, it's very likely that before you get to this point in time, having gone to the brochure, you know which of these things they want. They've probably said to you, they might say, well, do you know what? This is so much hassle, so much pain. We just want you to do it for us. And that's fine. But they might say to you, look, we have our own in-house finance team, and so we love what you're saying, but we can do it ourselves. We just want you to set it up for us. And perhaps actually, if you can do some training, that would be awesome. And so they might just want the middle level. Okay? Now, at this point in time, let's imagine, for example, that they want the middle level. Then it's 3 payments of $199. It doesn't have to that price. I'm just giving you some suggestions here as to what it might well be. And I want to share with you some price psychology here. You see, the way I've set this up is it comes up with a price of at least $280 for the setup. That's the minimum price I've set up. And I would recommend to you that you wouldn't want to do this work for less than that price. I know that too many accountants, too many bookkeepers are undercharging. So let's go with $280. Now, you'll notice the education is described as 3 payments of $199. There's some powerful psychology going on here. You see, if you do the maths, you can see that's actually $597, nearly almost $600. And if we had $600 there, it would seem expensive compared to the $280. But because we're breaking it into 3 monthly payments, firstly, it makes it easier for the client to pay if we let them spread it. It makes sense because we're making this a 3-month education program, so there's a logic to it. But the real reason we're doing this, and it's the biggest reason, is that we know from psychology that people don't do the calculations. They look at 3 payments of $199 and they judge it based on the $199, not the $597. And there's lots of studies that demonstrate why this works. And so what happens is they compare the $199 against the $280. And so even if they were just thinking about you just setting up for them, when they see how much extra you do for them, and it appears like it's less money, we know it's not, they know it's not, but that's what happens at the subconscious level. And so what by expressing it as 3 payments of $199, this actually feels like a much, much more attractive option than this one. So even if the client was thinking of doing it all themselves apart from you setting it up, they'll get to this point and probably pick the middle option, which means you're earning more than twice as much money, which is good for you as well. Now, if it's the done for you one, that will become a monthly recurring one. Now, if you do the math here, 257 times 12 is just over, if my math is right, $3,000 in this particular case. It's just over $3,000. If we'd have said this will be $3,000, that would feel expensive, particularly compared to $199 and $280. But because it's done for you, we can express this as a monthly figure. And when we express it as a monthly figure, the comparison that most people make at the subconscious level, and they don't know they're doing this, is we look at the 257 versus 199 versus 280. And in comparison with those two, this is the no-brainer. It makes much more sense for them to get you to do the whole flipping lot. And in the process, you make a lot more money. So that's why we do it that way. That's why we express the price in that particular way. It's a powerful piece of price psychology. Now, let's just say, though, that you present your price like this, and they've decided this is the one they really want. They want you to do it for them, but the trouble is they're not sure they can afford that. That's a bit outside their budget at 257. If the price is too high, what you can do is go back to the questions. Now, some of these questions are statements of fact. You can't change the number of bills they pay every month, but you might say, well, the reason it's that price, was it 257? Let me just check. Yes, the reason it's $257 is because you want to mail the bills to us every month and then we have to go and scan them. Well, if for starters you take out the staples and things, that makes our life easier. And actually, if you digitally submit them through Bill.com, that makes our life so much easier. And when you do that, we can give you a lower price. Would you like to see what that would be? And they will say yes to that, so we just reprice. And now it comes down to 197. And we can keep doing that, and that's the advantage of having preference questions. The more preference questions where you give them some choices, usually people ask for and say yes to all the options, and behind the scenes the price goes up, $257. And the important thing here is that first price you reveal becomes a reference price in their mind. So when you change it to 197, 197 feels like a much better deal than 257. It's about 20% less for starters, so it is a better deal. Had you have gone in with 197 to start off with, the 197 might well feel expensive to them. But the fact that you showed them 257 first, now in comparison, the 197 seems like a better deal. It's called the contrast principle, and we're using anchoring. This is powerful. Now, there's one more thing that you can do if the price is still too high and you still want the business, and that is you could discount. But I never recommend discounting. There's a better way, and that's why we have an options button at the top. So if the price is still too high and you want to get the work, then you can give what I call behavior rewards. You give a discount, but only if they do something in return. And I've given you one example here. So it might be if they're thinking of the 12 payments of 197, one thing, or the 3 payments of 199, you could give them a discount if they give you a payment in advance. So it could be an annual payment if it's the done for you, or upfront if it's Bill.com education. And what you could then show them is if you, let's say they go for the middle option, your 3 payments of 199 will drop to 3 payments of 183 if you're happy to actually pay us up front. And you could use whatever discount you want to encourage them to say yes, to give them the price they want, and in your case, you get better cash flow. Let me just go back. Now then, let's imagine that, and you can ask, by the way, more of those type of questions. You can give them discounts if they do other things to make your life easier. But let's imagine for a minute that the client decides that in this case they want to do it themselves. They've got their own in-house team to do the bill pay. But what they do want from you is the middle option. 3 payments of 199, they're happy with that. They hit the select button. Now, when they say yes, they've committed to buy from you. They're now in what's called buying mode. So once they've said yes, the process does not stop there. Now that they've said yes, now you can offer them upsells. Now, the upsell is where they can enhance what they're getting. And in this case, what I would suggest you do is you give them some other education options. That might be, for example, that they can have a half-day training workshop rather than an hour or 2-day hour one. They could extend, let's start that again. The half-day training workshop, which is standard, they could have that at their premises rather than yours. It could be they extend to a full-day workshop. It could be that you offer a series of online sessions and they can have extra online sessions. So let's imagine, for example, that they're kind of interested in you doing the training at their premises because it will make their life easier. So when we click on this button here, you'll see the price goes up from 199 to 232.
That feels and seems like a small jump. The reality is, because it's 3 payments of, it's actually gone up by about $100. But it doesn't seem $100 because of the fact that we're showing it as 3 payments. It's gone from $199 to $232. And that's a key point with the upsell. The thing about an upsell that makes it so powerful is when somebody agrees to buy something, once the purchase decision's been made, what you then upsell is enhancements, upgrades. And where those upgrades are relatively small amounts, they seem insignificant, and it's more likely that they'll say yes. The motor industry does this really well. When you buy a brand new $30,000 car, when you've bought the $30,000 car, the salesperson says, for example, would you like to take out the extended warranty? It's only $500. Well, in the context of a $30,000 sale, $500 doesn't seem much. And that's why many people take out the extended warranties and the other things that are included as part of the upsell process. The upselling is very powerful, and having a process like this works really well because the client only sees small incremental prices. The worst that can happen is you present these different options and they then say no. You've made the sale anyway, so we're talking about the bonus now. This is the icing on the cake if they now say, yep, we'd like those things, and we can now take our sale from $600 to $900 or whatever the maths are when they do this. Okay, that's how we might value price it if we are offering these options that are in the brochure. But as I said, it's even more likely that you will be doing bill pay services as part of something else. So let's now look at how you might do that very quickly. So now we're in cloud pricing with the normal branding, and I just want to show you the bill pay one. You can put your own branding to this. I've now opened up bookkeeping. Let's imagine you're doing a quote for bookkeeping. So the process would be you'd go through a brochure to build up the value of bookkeeping in the way that we've talked about. You'd also talk about the benefits of bill pay services and using bill.com in the way that we've talked about in the last video. Now we're ready to give a price for our bookkeeping and bill pay services combined. So we need to ask questions about the bookkeeping itself. And so we'd ask a series of scope questions and preference questions. So we might want to know, for example, how many sales invoices they raise every single month typically. So the bigger the business is, the more transactions, the more the price should be. You might want to ask what industry they're in. You might want to ask how many divisions or locations. You might want to ask if they're registered for sales tax, how many bank accounts they've got, how many credit card accounts, and so on. These are all scope questions to identify so that you make sure the more work involved, the higher the price will be. Also, you might want to ask them what accounting system they're on. Now we get into preference questions. So we could have a whole section for bill pay, and the question might be, do you want us to run your bill pay? And it's defaulted to yes, because that's probably your recommendation. And you've gone through the brochure, and they'll probably say, yes, we definitely want the bill pay. Fantastic. You now just need to know how many users would need access to it, because your price might depend on that. And of course, you can build in other questions that we had in that earlier model I've just shown you. We can also, of course, offer other preferences. So in the context of bookkeeping, we might give them a choice of how frequently they want the bookkeeping doing, weekly or monthly. We might give them the option that we might go and do the bookkeeping at their premises. They might say, yes, please come to our premises. We might offer meetings as well to review their bookkeeping, and so on and so forth. And just like we had said before, once you've gone through and asked them their preferences and got the scope identified, we hit your fixed price. It goes away, does the calculations, and presents them with those 3 choices. In this case, 3 choices of bookkeeping now, because we're talking about bookkeeping. And here is a list of things that you might want to build into your 3 levels of bookkeeping, if you like, your bronze, silver, gold. And you can see that we express the price as monthly payments. Let's imagine just for a minute the client wants the premium level, and it's 12 payments of $980, and that's outside their budget. Then, just like before, what we do is we then work with the client to change the package. And so we might say, well, the reason it's that price is because you want it done weekly, but you don't need it done weekly. We can do the bookkeeping once a month. That's sufficient for your size business, and it will be easier for us, and therefore the price will be lower. And so if we show the client the price, it's now just $840. This is now seeming a better number. If it's too high, we might say, well, the other thing you've asked for is we do it at your premises. But actually, if we can do the bookkeeping at our offices, again, we can make it a lower investment for you. It's now 784. So that's the power of the preference questions. What we do is we start with a high price, and then we work with the client, involve them in the process, so they can take back out of the virtual shopping basket, if you like, those things that on reflection they perhaps don't value quite so much or don't need. Now, once we've done this, we can, let's say they've agreed to 12 payments of 784, we can offer discounts if we need to, but hopefully we've agreed a price. We hit the select button. And again, we're into our popular add-ons. And just like when I showed you the previous model, we can build into here various enhancements to elements of the bill pay. So it may well be that if as part of your bookkeeping you're going to educate them around using Bill.com so they get the best out of it, then you could have in here the education options. In fact, because you're pricing bookkeeping and therefore not the standalone options, you might actually make this whole add-on section here, the upsell, make it around education. So they don't get any education by default because you're doing the bookkeeping. But what you might build in here on this page is, would you like us to teach you and your team how to get the most out of Bill.com? And then you could ask a series of questions. Would you like us to do a series of webinars? How many webinars? Would you like us to come to your premises? And each of those things, in the context of 12 payments of $784, will have a tiny increase on the monthly payments. And so it's much more likely the client will say, well, yeah, if that only adds on a few dollars a month, yep, I'll have that. Yes, please, I'll have that. And that's how we go through the upsell process.
So how do you find out more? Well, very simple. If you go to my website, which is obviously, it's Wickersham, which is my name, wickersham.co.uk. If you go to my website, what you'll find there is, firstly, you'll find out how you can get a trial version of Cloud Pricing 2.0, and you'll get a 30-day trial, you can play with it. And secondly, you'll also find out more about my mentoring. I spend a lot of my time mentoring accountants and bookkeepers. I have over 100 accountants and bookkeepers over in the US and Canada. We get together once a month and I teach value pricing. So if you want to find out more, you'll find out about my mentoring on my website, and you'll also be able to come along to a session for free as my guest and learn more about value pricing. So I look forward to seeing you sometime soon on a webinar, on a video, on a live meeting. Have fun. Bye for now.